That's the maximum for the FINRA illiquidity extension. Thoughts on secret layers? They're awesome. Sending inverse head and shoulders. I think I'm going to update Reddit with this real quick. 1 second, guys. Why do insiders automatically DRS? Because they can't sell their shares. It's DRS handles their employee stock program. What's up with the restless leg syndrome today? I don't know. Uh, it's not in the best interest of GameStop to get the shorts off their backs. Not only have retail become loyal investors, but they have become loyal customers and promoters of the brand. Why wouldn't RC want most? Thousands of super rich, loyal customers for life who would buy anything and everything that GME sells. If Elon can sell tequila, RC can sell mayo bananas, and apes would buy. That'll fade, right? Like, you think that brand loyalty would last for life, but unlikely. They sure do get a lot of extensions. They do. Check it out, reverse crime. Why did I get the feeling that you were a Storm player pre-Seething Song Plan? I always played Storm. I love Storm. That's like one of my favorite decks ever. I got 2x Jin, 400C. Sounds like it should offload this for Feb. Lower strike if possible on the next run up. Also, Fairies. Fairies is my other favorite deck. Darth Dan. 2x Jin, 400. Sounds like you should offload this for Feb. Lower strike if possible on the next run up. Yeah, you could. That's advantageous. Um, That's why I think both is so advantageous, right? Because the DRS camp is going to DRS, the options camp is going to option, and the combination of those two likely presents enough illiquidity to drive a squeeze. If we know that they're due for a volatility squeeze based on the fundamental analysis of the market, and retail can create a gamma squeeze, then that is our highest chance of triggering a short squeeze. I'm gonna go further out to avoid IV crush. I'll probably buy my like at the money puts for the straddle. Maybe April. It depends on what IV is looking like. I think IV will be lower further out, so I'll probably buy April at the money puts. It's not a cheap play, but preferred cloud blade variant. Oh, I quit right around that time, but damn, I'm trying to remember the name of it. I didn't play it a lot during that period. It was like Esper Blade, I think. Who else is excited for zero DTA day tomorrow? Since they put in the margin delay rules, is there anything you're seeing now that disproves the possibility that someone's got margin got blown up last week and we'll find out next week? We wouldn't find out next week because of the deferment. It would be shit at the earliest. Um, it's possible that it could be as soon as December 13th, but all the way out to the 15th, December 13th through 15th. The deposits are required by December 8th through 10th, depending on how far the deferment pushes it. But I mean, we'll see, right? I have long-term calls, so it's not something I really have to consider. That's the beauty of long-term calls, is that you can just buy them and not think about that like day-to-day shit. Remember we say we should wait for IV to drop to 80? It's close on the Aprils. It's in the 80s already. It hasn't dropped below 80, but historically that doesn't happen very often at all. Uh, David Lehrbaum Sr., thank you so much for becoming a dillionaire. I appreciate the membership. I'm gonna play you a chant, sir.
I want to be a billionaire.
Hit me up on the Discord after the stream, and I will get you added to the Dillionaires Country Club.
Let's get it. We're not a cult, yo. Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult, bro. We some GME lovers, not a cult. Not a cult.
But to buy all that theta, not for me. But you lose it slower, right? So you're buying a rate of theta. You're not. So it's not like you're just buying all that theta. By having longer term calls, your rate of theta is decay is lower. So um, so you're buying a better rate of decay. You're spending a lot on theta, but I have to say deferment is my personal least favorite word of the year. Mine is exemption. I'm sick of seeing that fucking word. I don't do MTG anymore. Um, and I'm vehemently against EDH. I always thought of it as an attempt to dilute the game. Um, tinfoil hat here. Illiquidity can be resolved by supply and demand, i.e., raising the price. Crazy, I know. I know, right? Can you tell me how to lose 20 pounds in 3 days? I don't know. Lose a limb? I think people with long-term calls are still freaking out if they bought GME was 220 or more. I guess. But they can just buy more calls and average the loss down, right? People about, I mean, fucking DFE had like $15 calls months out, right? Like over 100% of the what GME was trading at the time. That'd be the equivalent of having like a 360 call today, right? And he watched those dip into almost nothing before they ran. Do you think the progressive lack of volume has to do to gradually reducing their short exposure? No, I actually think the progressive lack of volume has to do with people not buying fucking options anymore. You can actually see the sentiment shift when OI on GameStop starts to decrease, so does our price action. That's it. Retail stop buying options or just buying and holding. Less open interest means less gamma exposure. It's pretty fucking simple. I mean, are they covering marginally? Yeah, probably. Of course. Why wouldn't they take advantage of opportunities to cover? They're not retarded. Can they cover their old short position? No, it's astronomically out of the money. So the only thing they can do with that is continue to kick it down the road. But by retail not buying options, not being informed about options, refusing to learn about options, you know, they essentially release that pressure from the short hedge funds, and that pressure is so important. And you don't need me to tell you. Go read the fucking SEC report. Gary Gensler wrote it down in very simple terms. XRT had 8,656,422 FTDs October 4th through 7th. T plus 35 from those dates to the peak of the run on November 17th. Immediately slammed just after. Those FTDs are on that day. So you go before them. The FTDs are settled the day. Never mind. Why do people think it works that way? So when the FTDs are a rolling total. So if on October 4th you have millions of FTDs and the next day you have none, they were resolved. They do not carry forward 35 days. The FTDs are from 35 days before that. Do you have a percentage split? You like stocks options for like a long-term play? Depends on my confidence in it. I would say anywhere from like 50-50 to 90-10. But most of my long-term holdings I have contracts on as well as stock.